So you hear about good years, and then you hear about record-breaking years. In 2025, Morgan Stanley didn't just have one of those. They absolutely smashed their own records. But this wasn't just some lucky break in the market. No, this was the result of a very deliberate multi-year strategy. So the big question is, how did they build a machine that could pull in over $70 billion in a single year? Well, let's break down the blueprint.
Okay, first things first, let's just let this number sink in for a second. $70.6 billion. That was their full year net revenue. And to put that into perspective, that's bigger than the entire economy of some countries. So this isn't just growth, right? This is a sign that every single part of their strategy was firing on all cylinders.
And you don't have to take my word for it. Here's the view from the top. The CEO, Ted Pick, he points to multi-year investments. But honestly, the real key word in his statement is this phrase right here, the integrated firm. He's basically saying this is what drove their momentum. And frankly, it's the core idea we have to unpack if we really want to understand their success. Right, so that huge revenue number, it's just the tip of the iceberg. Let's peel back the layers a bit and look at the other numbers that really show just how healthy and how profitable the whole operation was in 2025.
And what you see right away is that this success was, well, it was everywhere. Earnings per share, that's over $10. They're now managing a colossal $9.3 trillion in client assets. And they hit a return on tangible equity, or ROTC, as you'll hear it called, of almost 22%. Now that last one, that's a really important indicator of just how profitable they are.
So I just threw that term at you, ROTCE. What does it actually mean? Well, think of it like this. It's a way to measure how good a company is at making money from its main business, its core assets. A higher number, like that 21.6% we just saw, tells you they are running an incredibly efficient and profitable machine.
Okay, so we've seen the incredible numbers. The big question, the crucial point is how? How did they pull this off? Well, according to their own leadership, the answer lies in one central strategy. They call it the integrated firm, and this is the blueprint we need to understand.
So what does this integrated firm thing actually look like in practice? The whole idea is to basically break down the walls between their big divisions. You've got wealth management, investment management, and institutional securities. Instead of them all operating in their own little worlds, they work together. Imagine a startup founder. Morgan Stanley can help them with early funding, then guide them through an IPO, and then they can manage their personal wealth for decades to come. It's all about serving that one client through their entire life cycle.
And this entire model, it's held up by four key pillars: a clear strategy, a unified culture, massive financial strength, and a relentless laser focus on growth. This is pretty much the foundation for the whole vision. All right, so let's see how this strategy actually plays out in the real world. We're going to start with what was the absolute engine room of their 2025 growth: wealth management. I mean, the numbers here are just mind-boggling. The wealth management division on its own brought in a record $31.8 billion in net revenue. It's a powerhouse, and it's absolutely central to the firm's stability and its growth.
Now, this is where it gets really interesting. It's not just that they're growing, it's the speed of that growth. This chart, it shows the new assets they brought in during two different 5-year periods. So from 2016 to 2020, they pulled in about $330 billion. Not bad, right? But then look at the next 5 years. That figure more than doubles to over $735 billion. That is a massive signal of client confidence and trust.
And if we dig even deeper, this number, roughly $1.64 trillion, that represents the fee-based assets that came in between 2021 and 2025. Now, why does that matter? Well, these are the most valuable kinds of assets because they generate consistent, predictable revenue. And that figure, it's nearly 3 times what they saw in the previous 5 years. So it's not just more assets, it's a huge jump in the quality of those assets. But look, a year like this, you just can't build it on one division alone. The wealth management engine was incredibly powerful, no doubt, but to hit these kinds of numbers, every single part of the business had to be firing on all cylinders. And sure enough, the institutional securities division, that's their trading and investment banking side, was right there with wealth management. They posted an incredible $33.1 billion in revenue. And this was really driven by record results in their equity business and a big comeback in investment banking. And this wasn't just a story about success in the US either. This chart really shows their global reach. So yeah, the Americas still make up over half the business, but look at this. Their operations in Asia and in Europe, the Middle East, and Africa,
Together, they contribute almost half of the revenue. That shows you a really well-diversified global machine. And to round out the picture, you've got their investment management division, which has also been scaling up incredibly fast. I mean, in just 5 years, the assets at Parametric, which is a key part of their business, nearly doubled. And at the same time, the capital they have in high-growth alternatives, that more than doubled. So this shows they're not just growing for the sake of growing, they are growing in the right strategic areas.
So, okay, 2025 was clearly a blockbuster year, a home run. But for Morgan Stanley, this isn't the finish line, not even close. They're actually framing this amazing performance as proof that they are now operating on a whole different level, with their sights set on an even bigger future.
And this slide, this really puts that idea of a higher plane into perfect perspective. Look at this. From 2016 to 2020, their average earnings per share was about $4.47. For the next 5 years, it jumped to $7.50. This isn't just one good year, you see. This represents a fundamental shift, a step change in the company's baseline profitability.
And all of this sustained performance, it's given them the confidence to set some incredibly ambitious goals for the future. I mean, the big headline target is to cross $10 trillion in client assets. But they're also aiming to consistently deliver a 20% ROTCE and a massive 30% pre-tax margin in wealth management, all while keeping the business super efficient. These are the benchmarks they've set for themselves, and you can bet this is what the market will be watching.
So when you put it all together, the integrated firm strategy has clearly unlocked a whole new level of performance for them. It's transformed Morgan Stanley into this diversified global powerhouse, and 2025 was all the proof they needed. So the only question left to ask is this: with such ambitious goals on the horizon, can they keep up this incredible momentum on their road to becoming a $10 trillion firm?